This topic of financial statements, part two. Uh, so, financial statements, as we discussed, there are four types of financial statement. What type of question reflects that where you have to look into? So, first question, if you ask how well did the company perform during the year, so the right statement you have to look is this income statement, because that reflects that how well the company performed during the last year or last accounting period. And how do we calculate, or what do we calculate in our income statement? Revenues minus expenses, that is our net income or a net loss. So there is a possibility that the expenses are more than revenue, then in that case the firm has a, or a corporation has a loss. Now, if the question is that why did the company's retained earning change during the year, then we have to look at the in statement of retained earning, because that is going to give us the real answer that why there is a change in retained earning. Beginning now, how we calculate it? Beginning retained earning balance from the previous year or a previous accounting period, plus we add up the net income from this year or subtract the net loss from this year, minus also the dividend. If we paid dividend, then we have to subtract the dividend. So by this way we get a ending balance which reflects that why did the company's retained earning change during the year. The third is what is the company's financial position at year end? If we want to know the financial position means that how much this company owns as an asset, what are their liabilities, and what is the residual value after paying all the liabilities, that is the shareholders equity. So, and for this question we have to look at the balance sheet, and balance sheet is always in a shape of an equation, not in a shape, but they are always like an equation. Like on the asset side must be equal to the liabilities plus owner's equity. Now, so you see here we reflected it in the shape of an equation, like assets is equal to liabilities. Now we can read this question in this way as well, like how many assets this firm or this business own through their own resources or through the owner's money, and how much they own these assets through the liability, or through the borrower's money, or through the someone else money which they have to pay back. So this is the way that we can calculate it. The fourth question, that if we are interested to know that, where do we have to look? How much cash did the company generate and spend during the year? Statement of cash flow. So operating cash flow, that's we can calculate it through operations, that how much money they generate through revenue and how much money they have to pay as an ex. That's what we call it as an operating cash flow. There is another part of our cash flow which we call it as investing cash flow, that if we buy any asset, that cash is going out, or if you sell some asset and that is cash coming in, fixed assets mostly. So in that case, or a intangible assets. So if in that case, whatever the money is coming in or coming out, it can be a positive, it can be a negative. That is what we call it as investing cash flow. The other one is a financing cash flow, that if we generate any money for the corporation or a business through selling bonds or through selling stocks. So these are all the things, or we pay back the loans, or we pay back some, redeem some bonds, or we have to call back some stocks. So this way that we can focus on only on financing cash flows, and this can be a positive, that can be a negative, and altogether all the three, like operating cash flow, financing cash flow, or investing cash flow, all together is going to give us a cash flow, increase and decrease in the cash. So this is the answer. How much cash did the company generate and spend during the year is reflected or answered through the statement of cash flow. So these are broader points related to each statement, also called the statement of operations or a statement of earnings. So these are also the names for the income statement, statement of operations or statement of earnings. Report two main categories: revenues and gains, and expenses and losses. So these are the two main items under which we have a different heads. And the bottom line of this statement is the net income or a loss. Net income or a net loss. So net income is the most important item in the financial statement. Definitely, we have to look at it in a way that what is a net income from this accounting period. Reports revenue and expenses. These accounts are only reported on the income statement. Revenues and expenses are only reported in income statement. They are not reported in the balance sheet. So it shows net income or a net loss. So if revenue exceeds, the company has a net income. If expenses exceeds, then company has a net loss. And this is a particular shape of if you look at these, we represented it through X figures, but a main idea that how it looks like. So this is a very standard, and I want that you have to understand for every accounting statement, on top of the statement, what you have to write it, three things. One is the name of the corporation. Here we are just generalized it, and we might mention it as ABC Corporation, or it can be any name, the business name, right? The name of the corporation. The second line should reflect the statement name. It's an income statement, it's a balance sheet, it's a statement of retained earning or statement of cash flow. So the second line is telling us about the name of the statement. And the third line, which is also very important, is the time period. So if it is an income statement, so income statement is a flow concept. Flow concept means that there is a start date and there is an end date. So it means that what we are doing, we are preparing this income statement over a period of time. Over a period of time means it's a video start and there's an end. It's not a snapshot, so it's a video. And that's why we write it here year. This means whole year. Ended, which is ending on December 31st, 2023. So what are the items in our income statement? Net sales, other revenues, total revenue, that's the revenue side. And then we are going to cost of goods sold. When we subtract it from the revenue, that is going to be our gross profit. And then we have a general, administrative and selling expenses, income from operations, interest expenses, and that is going to be our income before taxes. And then we subtract the taxes, then it's going to be our net income. So this is a very standard format, and it should be in the mind of every accounting student that what is a shape or a journal format of an income statement. So top three lines, very important. And then we have a revenue, then we have a cost of goods sold, getting a gross income, and then we have a administrative and selling expenses, interest expenses, and then we have a income before taxes, and subtract the taxes, then we have a net income. The second statement is a statement of retained earning. Retained earning is a portion of a net income has kept over a period of year. Positive balance indicates revenue exceeds expenses. Cumulated deficit indicates expenses have exceeds revenue, and net income or a net loss flows from income statement to the statement of retained earning. So opening with the beginning balance from the previous periods, that's what we accumulate together. We started with the opening balance, and then we add up or subtract based on whether it's a net income or a net loss. Then we can also adjust for the dividends. So if we paid dividend, then we have to subtract. If we not, then there is no need to subtract the dividends if it is not paid. So report ending retained earnings. So this is now again you see here, this is the standard format of a statement of retained earning. So on top, the corporation name, the second name is the statement name, statement of retained earning. And again, the retained earning is for the whole period, and that's why we are saying year ended December 31st, 2023. What is the opening balance? We started with the opening balance. We add up or subtract based on whether we have an income or a loss. Here we are assuming it is a net income, so we add up, and then we subtract the dividends and the net retained earning balance, which we have to carry from here to the balance sheet. So balance sheet, also called the statement of financial position. This is the second name of and mostly in North America, we use the statement of financial position as the name of a balance sheet. What this balance sheet reports? Assets, one thing. the other is liabilities, and the third one, which is a residual value. When I am saying residual value, means assets minus liabilities is the shareholders equity or owner's equity. So report assets, liabilities, and shareholders equity. So those accounts are reported only on the balance sheet. Shows the assets equal sum of the liabilities and shareholders equity. Reports retained earning, which comes from the statement of retained earning. Now shareholders equity, under shareholders equity, we are reporting the retained earning, and retained earning is coming from the statement of retained earning. So these are the journal items included in balance sheet. So we write it current assets. The current assets are those assets which are expected to convert into cash within a year. So whichever is longer, so we have to expect to be converted to cash, sold or consumed in the next year or within the business operating cycle. So whichever is longer. So includes cash and cash equivalents, short-term investments, accounts and notes receivable, inventory and prepaid expenses. Then there is a long-term assets as well, or we can say that's the fixed assets will be held longer than 1 year. Include property and equipment, land, building, computers, equipments, intangible like softwares, franchise, on all these things, and long-term investments. On this liability side, again, we have two types of liabilities: current liabilities and long-term liabilities. Debts payable in the next year or within the business operating cycle, that is called as a current liabilities. Includes current maturity of long-term debt. So the portion of a long-term debt which we have to pay within the next year, that is considered to be the current assets. Accounts payable, income tax payable, accrued expenses payable. So these are all the current liabilities. Long-term liabilities, debt payable more than 1 year from balance sheet date, includes long-term debt, notes payable and bonds payable. So stockholders equity on the balance sheet represents the stockholders ownership of the business assets. Like as I mentioned that out of total assets of a business, how much is owned by the owners. So consist of a common stock, contributed surplus, retained earning, and accumulated other comprehensive income or loss. So these are mainly the 4 items you can see on the shareholders equity or a stockholders equity, and mostly in most cases you see only common stock and retained earning. So the 2 others are also possible in large corporations. Contributed surplus, which is an additional money the stockholders invested in the business, but they have not purchased like a common stock. Contributed in the as a common stock, and accumulated other comprehensive income. If there is some other income, we will discuss in detail about the other accumulated comprehensive income for the businesses. Now, what is a typical shape of a balance sheet? So this is a typical shape. Like again, the 3 top lines representing the name of the corporation, the second line the statement, which is balance sheet here, and December. Now there is a change here, and that we have to note it down very carefully. We are not saying here for the year ended on December 31st. We are saying just a date on which it is reflecting the situation of assets, liabilities, and shareholders, and that date is on December 31st. So it's like a snapshot that captures the movement, only a particular moment. It's not like a video. So that's a difference. A video is a flow concept, and a balance sheet is a snapshot concept. It's not a flow concept, it's a stock concept. So it's a situation of a company on that particular day. So one side we write assets, and the sequence of the asset is current assets on top, and then we have to write it long-term assets or fixed assets, and then we write it tangible assets. Liabilities, again, the sequence we follow for the liabilities are current liabilities and then long-term liabilities. And the third portion of the liability and shareholders equity side is a shareholders equity. And in a shareholders equity, common stock, contributed surplus, retained earning, and total stock equity is there. The statement of cash flow, that's the 4th statement, but we are preparing as a financial statements. So measure cash receipts and payments. 4th required financial statement. categorized into three types of activities, as we discussed when I am explaining that there are three portion, very separated or distinct portions of the financial cash flow statement. One is cash flow from operating activities, that is from the real business, what the business is selling. And the second one is cash flow from investing activities, and the third one is cash flow from financing activities. Reports cash flow from operating, investing, and financing activities results in an increase or decrease, shows whether the cash is increased or decreased during the year. Report ending cash as a balance on the balance sheet. So the ending balance of the cash flow statement, which is called as an ending cash, which should be equal to the balance sheet cash. So operating activities, cash receipts and payments from selling goods and services. Investing activities, purchasing and selling long-term assets. Financing activities, issuing stocks, paying dividends, borrowing and repayment of borrowed fund. So this is all we want to discuss in detail about the financial statements. And you see there are 4 financial statements, and we discuss in detail about their characteristics and features. So please continue to watch the part 3, in which we will discuss the remaining topics of the chapter.